Over in Tokyo, we have Mike Fern standing by, and he's here to join us for a look at what's moving Japanese stocks today. And first off, Mike, what's behind the drop in export stocks?
Well, the yen rose to a 4-month high against the dollar and also neared a 2-month high against the euro. So that's cutting the value of overseas sales. Honda, which is Japan's second biggest car maker, gets about 9/10 of all its revenue outside Japan. So it's really being hit by that rise in the yen. Honda off by 2.3%. Canon earns more than 3/4 of its revenue outside Japan. It's down 1.3%. Sharp, though, rising, going against the trend, up more than 0.5%. It says it's going to increase capacity at a factory that makes liquid crystal displays here in Japan, and it's holding a news conference 3.5 hours from now to give details on that. Regulators may reprimand 3 Japanese banks for missing earnings targets. They are Chuo, Mitsui Trust, Shinsei Bank and Aozora. According to the Nikkei, it says they did all receive government bailouts, and the paper says that the FSA, the Financial Services Agency, is going to issue business improvement orders to all 3 because last year's earnings were 30% lower than the targets that they set out in their rehabilitation plans. Susan.
Well, Mike, change of strategy, at least from Credit Suisse, is recommending a change in that regard in Japan. I mean, what's it saying?
Well, it's less enthusiastic about the economically sensitive stocks, the cyclicals, and it wants to balance them with defensives, which could include drug makers and power producers. Credit Suisse lowered cyclicals from overweight to market weight. It raised defensive stocks from underweight to market weight, so they're balanced in that portfolio. It also recommends shorting electrical device makers and taking a long bet on automakers. The reason for that, it says car manufacturers have adjusted their inventory quite well to match demand. Electric appliance makers, it says, haven't made that change well enough, so they may have too much inventory on the books and not enough demand. Now, Credit Suisse says financials and real estate stocks have lagged a bear market rally here in Japan. It says that they will be the destination of any excess liquidity. Back to you.
Okay, Mike Fern in Tokyo.